PayPal stock ticker symbol PYPL reported earnings today and the stock was down 8.6%. Brutal day for shareholders. And we're going to talk about it. We're going to talk about, is PayPal a buy? Why did it fall? And is it a good fit for your portfolio? But before we dive in, if you could please go ahead, like and subscribe. It really helps me out. Let's dive in. Now, you guys all know what PayPal does. They're a digital payment platform that enables users to send and receive money, make online purchases, and manage their finances. It acts as a digital wallet, allowing users to link various payment methods like credit cards, debit cards, and bank accounts, or maintain a balance within the PayPal account itself. Now, PayPal reported a double beat. They beat on revenue, beat on earnings, $1.30 versus $1.40 in EPS, growing 19% year over year. Revenue grew 5%, so a lot of operating leverage. It's actually a very good quarter if you ask me. Gross margins were up by about 100 basis points, 120 basis points. Net income margins grew and net income dollars also grew as well, going from 1.12 to 1.26 billion dollars. Very strong. However, free cash flow did decline, and this was largely due to some of their buy now pay later originations. KKR buy a ton of them. They didn't buy a lot this quarter. I think they'll make up for it in the next quarter, and that is why the free cash flow margin was down 8.35%. And I think this was one of the big reasons why the stock actually fell. Free cash flow margins decreased significantly more than the market did expect. Free cash flow came in a little light, and that was one of the big reasons why the stock was down. Now, revenue, like I said, was up 5.1%, going from $7.8 billion for the quarter to $8.2 billion. Operating expenses grew only 3.4%. So again, that has to do with that operating leverage, and largely it has to do with this right here. Transaction expense grew almost negligibly, right? It grew less than 1%, while everything else grew in line with expectations. Transaction expense actually grew a lot slower, and that's the biggest expense, and that is why we saw a lot of operating leverage being built in. So there's definitely some internal things PayPal is doing to lower the expense. It could also do with pricing power and the negotiation leverage they have. That's a really good thing that shareholders can look at. And that is why you saw net income was up 10% for the quarter. And then if you actually look at the amount of share buybacks they do, that's how you get that earnings per share of 19% growth. Looking at the individual segments, so branded checkout right here. So this is the PayPal button, right? That grew 5%. That represents 29% of total volume. P2P, so, person to person, that represents 27% of volume. That grew 10%. Very strong double-digit growth. We actually saw an acceleration in this figure right here, as well as the branded checkout. And then the PSP, which is their biggest segment, this includes their Braintree segment, only grew 2%, roughly in line with what we saw in previous quarter, down significantly. And this is because mostly of their price to value strategy. So I do expect one more quarter of like mid double-digit growth. I do expect one more quarter of low single-digit growth before we see growth reaccelerate in this segment right here. It is the biggest segment, so once growth reaccelerates, the market will probably ascribe a higher price point to it, and I think this is one of the other reasons why we actually saw the stock fall. I think the market was looking for maybe 3 or 4% in PSP growth, but then total payment volume was up 5%, an acceleration from last quarter, but down from the quarter prior, mostly because this PSP segment had very high comps from the same quarter in the prior year. Branded experiences was up 8%, and then Venmo grew 12%, and that now makes up 18% of total volume right there. So PayPal seeing growth acceleration from the first quarter into the second quarter, and also from the same quarter last year. Look, 8% growing to 12% for Venmo. We saw branded experience 6% to 8%. PSP didn't see any type of acceleration, but we did see that in P2P. That accelerated, as well as branded checkout, which was roughly the same, but actually accelerating from the first quarter, as you can see right there. So very solid results. Shareholders should actually be really happy with what the management team was able to do this quarter compared to last quarter. Now, looking at some of the commentary here, you can see total payment volume increased 6% to $443 billion, 5% on an FX neutral basis. So, volume is still increasing. Now, payment transactions decreased 5%. And again, that has to do with this PSP segment, the payment service provider segment. If you actually just exclude the PSP segment, right, payment transactions actually increased 6%. So when volumes increase 6% and transactions increase 6%, that's why you're seeing in most segments revenue actually accelerating, especially when you dive under the hood. Active accounts increased 2% to 438 million. That's very solid. And on a sequential basis, active accounts increased 0.4% or by 1.7 million. So PayPal continues to do everything right in this quarter, but what about the next quarter? Looking at their guidance, PayPal actually increased their guidance. You can see right here, they increased their full year guidance. In April, they guided for $4.80 to $4.95 for the full year 2025. They actually increased that to $4.90 to $5.05. They did that for both the GAAP and non-GAAP segments. And then for the third quarter, PayPal is guiding for a $1.14 to $1.8 in GAAP EPS. We also got some other guidance figures here. So their TPV growth for Braintree, which is essentially just their PSP segment. So that actually, you can see that was 18% growth here in the second quarter 2024. That has actually slowed to about 2% growth. It doesn't actually show it here in the second quarter 2025. But in the third and fourth quarter, we should see sequential increases, probably back to that 10% growth mark for Braintree branded checkout as their price to value strategy starts to play out. And this is going to be even higher margin for PayPal. So I do think that if you are looking to get into PayPal, this is probably the quarter. The sell-off you saw today, this is probably where you want to buy PayPal because I mean, if we are to see an acceleration in the PSP segment, which is 45% of volume, 44% of volume, that's going to become a larger segment. It's now higher margin thanks to their price to value strategy. This is the management team doing everything right to set this stock up for absolute success at the end of 2025 into 2026. Now, what is the thesis for PayPal? It's very, very simple. You want the company to continue to execute on all of its initiatives, as well as scaling their next generation growth vectors, which is their crypto and stable coin, right? They have PY, the USD, and they are getting into the crypto space. Very high margin stuff. This space is still ripe for execution. You're looking at the new ad segment. We're really going to start to see that to be revenue and margin accretive here in the fourth quarter 2025 into 2026. And then agentic, using AI for their merchants so that they can have better consumer experiences and making the whole checkout process significantly easier, the payment process significantly easier for both sides, the merchants and the consumers. You're also betting on the fact that PayPal is going to continue to deliver outstanding shareholder value. The company buys a ton of stock back. In the trailing 12 months, they bought back 6.69% of shares outstanding. And this is part of the reason why you see such a big EPS beat every single quarter, because they grow revenues by single digits, they build operating leverage, and then the share buybacks is just that icing on top of the cake. And eventually the market's going to wake up to this right here. As it is right now, PayPal have 995 million shares outstanding. This was 1.2 billion just 2 to 3 years ago. So they're buying back a lot of shares. Coupled with the fact that the company's valuation is actually very, very cheap. You have an EV to EBITDA of 10, a PE ratio of 14 times, and a shareholder yield of 6.8%. That is not crazy for a company that's likely going to expand its margins as the PSP segment and Braintree segment inflect higher. And a 10 times EV to EBITDA, that's actually super, super cheap, if you ask me. So this is how I see things going, right? Looking at the trailing 12-month revenue, 32 billion, I see that growing at about 5.5% for the foreseeable future. I do think there's upside to these numbers. And then if we use a 20% EBITDA margin, growing to 22%, again, which is not crazy, and I do see upside to these numbers, you're looking at a EBITDA of about $9.2 billion. And using an EV to EBITDA of 13, you get the enterprise value, subtract the net debt, and then divide by shares outstanding. I'm looking at shares outstanding declining sequentially by about 4%. I also think there's upside to these numbers unless the stock starts trading at the $150 mark. I think, 3 to 4% share buybacks is more than doable for the foreseeable future. And then at the end of 2029, you get a stock price of $153. The current stock price is $71. The company does not pay a dividend. So you're looking at a compounded annual growth rate of 16.57%. And that's using consensus revenue expectations, simple margins expanding ever so slightly, again, below expectations, and mild multiple expansion to get a 17% CAGR over the next 5 years, with the fair value being 87, the current price being 71. I think PayPal is probably a steal right now. And you can see after its earnings, it pulled back to the $70 mark right here, right on the cliff of this heavy volume area. I think this is a great place to probably start selling cash secured puts. PayPal trades at about $71 right now. Maybe sell a $70 cash secured put. Maybe look out to August, September, collect $3 or $4 on top of that. And if it gets assigned, you just hold it into the end of the year, into 2026. If the stock continues to move up right here and bounce off the 100-day, you can then just keep the premium. Either way, I think PayPal at $70 is a steal looking at everything that's coming. Analyst consensus have a buy rating on the stock, a high of 125, an average of 84, which is about 14% upside from where we are right now, a low of 56. So the risk to reward here is very, very favorable for PayPal. And do I think PayPal's a buy right now? I think yes. I think 2026 is going to be the year where PayPal inflects to the upside. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.